This is Tracy at Zacks with the FOMC statement update. And they finally tapered. Yay, we finally have the taper. But the statement did have some interesting details in it outside of the taper, which was $10 billion. They're going to split it up evenly in between the treasuries and the mortgage-backed securities. So $10 billion was within the range of what everybody thought they were going to do. But they also did say that they're not on a preset course. So anyone who thought, the 10 billion could just be repeated at every meeting is probably not going to be the case. They're obviously going to wait and see what happens with this first cut and then reevaluate at every meeting. So some of the uncertainty is still out there, but at least the taper has begun. Interestingly, at the time of this recording, the bond market wasn't doing much, but that's because a lot of the taper was already priced in. The 10-year treasuries had already, risen close to where they were in September. So, this is not a surprise to the bond market. Stocks like this move, and some of that is because what else was in the statement. The Fed also said something interesting about its 6.5% unemployment rate, which was considered the level where the Fed could then move the Fed fund rates higher. They said today, and I'm going to quote exactly what they said to get it right, they said that they would raise it when it was well past the time that the unemployment rate declines below 6.5%. So that means we could have the 6.5, but they may still not be raising the Fed fund rates. And that's key for stocks because, it's basically telling Wall Street that they still have their back, they're still watching out for them, and stocks were up on that news too. Now, at the time of this recording, we're awaiting the Fed press conference, but, the statement is definitely interesting and marks, an interesting end to Ben Bernanke's career, basically, at the Federal Reserve. We'll have more later on Zacks.com, so make sure you check in there for, more commentary.